Everybody, good morning. I'm glad you being a part of this call on a Saturday morning afternoon rather. What we're going to do is we're going to begin this webinar in just a couple of minutes. We are waiting for Pratik to be a part of this call. The family is coming back from a small celebration because it's Pratik's dad's birthday today. And while we chose to have this a little earlier, we want to make sure we don't uh, uh, confuse the audience with this schedule since we do these calls generally only at 11 o'clock on a Saturday morning. But we had to accommodate the small request that Pratik had made. So he's on his way back. He should be joining us very soon. In the meanwhile, I'd like to set the expectation really clear. Everybody on this call, whoever is going to listen to these calls, please note that this is not a stock trading session. We are not looking at doing intraday futures or any of those practices. The purpose of having this mechanism is for those of you who've been with us for at least 3 years and above. You would note that we had an engagement with the India Infoline, and we were doing these trades based on certain parameters that I would run. And the reason I stopped that was because it was getting one operationally very challenging, and secondly, from a legal standpoint, with the regulators coming in with some crazy requirements, it was not making economic sense, and from a scalability, it was taking way too much of our time. Having said that, what we are going to be presenting today is an alternative to all the challenges that we are currently facing, and how can all of these be overcome? What kind of opportunities are going to be coming our way, and how we're going to be making sure that we can still take advantage of the short-term rises in the market without having to be only focusing on long-term investments. Having said that, I am going to be introducing Pratik and Dinesh. Pratik is the current MD of LKP Securities, and he's done his BA in economics at the Leeds University. And he's also going to be chaired by Dinesh, and Dinesh has been a part of LKP Securities for the last 30 years. Those of you who are not going to be having a conversation on this call, I request all of you to please mute your lines so that we have a pleasant learning experience. And great, Pratik, are you on call?
Yes, I'm here. Sorry, I think my
Excellent.
name has been showing as Prithvi, but yes, I'm very
Okay.
much here. Yeah.
Uh, Pratik, while Prithvi is bringing this up, I'd like to give you a brief background to my audience. Most of them are, in the C-suite or one level below. That's the work profile. Most of them do not have the time to, have a proper strategy around exploring different asset classes or different instruments. But given the social media world that we are in today, we definitely consume content from reels. We consume content from influencers in terms of how easy and okay, this is something that you should do. Why you should only keep investing in stocks. Da 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 da. Basically, content that is shared to get eyeballs and not necessarily make wealth, right? That's the background to the audience. They have 9 out of 10 of them have built almost all their wealth in mutual funds, except a few other instruments depending on their net worth. And my entire focus is going to be teaching them in terms of why sustainable wealth is more important than making things quickly just based on tips or some kind of strategies. You don't try the stock markets, you don't try the mutual funds, you understand them, right? You don't try marriages. So the point is, unfortunately, with the kind of content that is shared online these days, we tend to believe that, oh, am I missing out? And then, okay, we also like to put a small amount of money, 5 lakhs, 10 lakhs, and explore different opportunities. The challenge is none of them have the time, the wherewithal, or the bandwidth and the effort that goes into building a structured portfolio. So I'd like to give that context to you so you can present this, because I'm sure you've been presenting this opportunity to multiple audiences, as in the customers itself and other financial advisors as well. And I wanted you to know that there is a slight difference in terms of how our audience would be looking at, or rather expecting things from this webinar. So with that said, Pratik, all over to you, and I'll be moderating this discussion.
Thank you, Sharad, for this opportunity. Uh, Good afternoon, ladies and gentlemen. My name is Pratik Doshi. I'm the MD of LKP Securities. We have been running our organization for over the last 5, 6 decades now, since 1948. We've always been on to the institutional as well as the broking retail franchisee network. We are a pan-India broker. We have about 9 offices pan India, and we
Yes.
have close to over 500 franchisees. Uh, sorry, I think somebody's. We have
Pratik.
over 500 franchisees, active franchisees who work with us very closely. Uh, We now, over the period of time with our broking business, we have believed that distribution and advisory is a very important feature of everybody's portfolio. Um, there are different sorts of clientele which want to view different investments. You know, for example, a lot of the mutual fund investments are obviously more from a longer term point of view, looking at a span of 8 to 10 years and more. You have the PMS and the AIF sort of a portfolio, which normally is viewed over 2 to 5 years. And then obviously you have the direct equity portfolio, which can happen from an intraday to a short term sort of a portfolio. We believe that with our advisory product, we are bridging a gap wherein people who want to be part of the markets but don't necessarily have the time to be able to go out there to associate themselves with which stock to buy or which stock to sell. Our product, SPIP, which is called 7 Pick Investment Plan, SPIP is a product where we recommend 7 stocks every month. These stocks are selected by a 5 member committee. Our 5 member committee comprises of 2 technical analysts, a fundamental analyst, an IPO expert, and somebody from the strategy team. Um, our 5 member committee basically identifies close to around 20 stocks every month. They are normally between the NSE 500 and NSE 1000 basket. When they identify these 20 stocks every month, they then go out there and shortlist that list to 7 ideas, taking into account the corporate governance of the company, where if there is any shareholding pledge or any other corporate or any other negative sort of corporate access. We automatically eradicate these stocks from our portfolio list and then go and look at the 7 selected stocks for that particular month, whether they look good on the technical charts, whether they have a good fundamental story over the next few months. And then collectively, a 5 member committee picks out these 7 ideas. These 7 ideas are then emailed to you. So it's like a PMS, but in this fact, you know which are the 7 ideas which are being selected. You will have an opportunity to review this email as to why we like these 7 ideas fundamentally, technically. Basis the 7 ideas, you will get a SMS saying, "Would you like to execute based on these 7 ideas?" If you say yes, we automatically take that pre-trade confirmation and then we upload a bulk file, and then it is bought for all our clients all across at one go. If you say that you don't want to participate in this report and you reply back with a no, there will not be any form of execution which happens in your particular account. This is by far the only sort of exercise where normally our reports are issued in the first week of every month, every new month. So, anywhere between the 1st and the 10th of every month, you will see a new SPIP report which is being issued to you. If you decide, as I said, not to go for it, then that's your personal choice. Here again, we are here to only communicate with you twice a month. When is A, when we are issuing the report, and B, when we are sending you your summary of your portfolio at the end of the month. So it's not a sort of a day-to-day exercise where you need to be involved. Of course, you can personally go out there, view our report, check, what the stock prices are, on your screen. But for us, we will not be sort of, going out there and communicating more than twice a month, which obviously allows you also to have your portfolio work with you over a period of time, as well as for us, that what are the sort of recommendations we have put forward, and that we are only here to go out there and increase your returns on your portfolio. SPIP has been in formation over the last 5 years and more. We average anywhere between 16 to 18% returns year on year. We have done fairly well. Of course, when markets are flat or markets are on the up move, that is when obviously you will see a lot more better performance coming through for our reports. When markets are sort of in a negative frame of mind, you will maybe see a subdued sort of a return coming through. The advantage of SPIP is, like I said, it gives you as a client an opportunity to say, yes, I want to participate in this month, or I don't want to participate in this month. And therefore, the freedom lies very much to you as to what you want to make out of that. Normally, through my journey, I have seen a lot of clients of ours who either are associated directly with mutual funds or either are doing a direct equity portfolio. When you're associated with mutual funds, of course, you're always viewing it from a long term sort of a return point of view. We have all seen the upswings and downswings in the market. Let's say every 5 years, 7 years, you always get a big crash in the markets. It's always tough for a mutual fund investor to know when to continue to stay invested or to go out there and book profits, or maybe to go out there and buy in lump sum when the markets are sort of coming off or when they're at lows. But on the mutual fund side is where you are only going to be seeing returns from a longer term point of view. The advantage of SPIP and an advisory product is it will make you feel a bit more part of the market, wherein you feel that yes, you are putting money into sort of direct equity with a well informed decision of some 7 recommendations which have been provided to you. So today I see that there is an urge, there is a need, or maybe there is a fear of missing out feeling when the markets are doing well and the markets are scaling new highs. There's always a feeling that, oh, my mutual fund portfolio or my other PMS portfolio or my direct equity portfolio is not doing as well. This is a case where here it's a well informed decision of why we like these 7 recommendations, and basis on that you yourself will be able to guide and say, yes, I want to participate in this report for this particular month. So I feel as an organization, as LKP, we want to bridge that gap, and we want people to feel that they are participating in the market in some form or the other through a direct equity route, which is a well informed route. Once again, I would want to state that. And I feel the advantages are very clear. Normally, with my experience, from a broking house point of view, we normally have a set of formulas that the bread earner of the house normally has a direct equity portfolio. Whether it's a wife or a spouse or a mother or a father, is where you want to go out there and open an account for an investment advisory portfolio. And normally it's the children's account where you open their mutual fund accounts, because that's a long term portfolio. That's the sort of mindset which we normally want to create to our clientele, and that is the sort of distinguishing power which you have to be able to have investments in one particular asset class, but that investment in one asset class is then broken down into 3 4 different verticals, through direct equity, through investment advisory, or through mutual fund portfolio. And if you can view your financial planning from that standpoint, you will see various different kinds of returns which you are getting, but it also allows you to get a complete feel of the markets during this period. This is basically the sum and substance. We personally believe that also during times when there is a bull rally or when the markets are moving up, lot of people, all of us rather, we get into the whole, a sort of a certain tip which we receive from different friends or family or parties. We normally don't go back and double check whether that source is correct, or we don't go out there and see whether the fundamentals or the technicals of this particular counter are looking good. We just go out there and invest, basis on a tip. And when we do that, there are, I would say, 7 out of 10 times when you will always feel that you're on the wrong side, right? Because it's just a tip which is being forwarded to you, where there are some people who are having a sort of vested in interest, and therefore they are sort of pushing that particular idea to you. um, in this case, once again, here is a point where you are already well informed as a client. You know the 7 recommendations which have been given to you. And therefore, it's important that you have the information right in front of you before you press the button for yes or no that you want to go ahead and execute this particular report. So when you look at, and for us to give that level of detailing is something where we have sort of thought through this process, that an extended family member being part of the markets, gaining more knowledge with the reports which we are sharing with you, gaining more experience of to knowing where the markets are, and then having some level of exposure into this particular product. This particular product is, you can go out there and start with an amount of, let's say, 10 lakh rupees and invest your money out here. You don't have a limit of a minimum of 50 lakh rupees or a minimum of 1 crore rupees like you have in PMS and an AIF. Here you can go out there and put a smaller amount, and it will start giving you a feel of what the returns look like. And like I said, it's more about having a well informed decision in front of you and a well informed report in front of you, which will allow you to go out there and take a good call on the markets. uh, I think, Prithvi, if you want to just quickly showcase the presentation, then I can also just brush through that. Yeah, sure.
Sorry, Pratik, before we begin, I'd like to, Prithvi, can you go to that slide which says stock selection process? Okay, stop here, please. Now, Pratik, I know why you'll do what you'll do, but given the fact that, we have amongst us a few members who are not very certain about why these things are need to be avoided, because I see there are, penny stocks, and then we see that the stocks that are at a 52-week low, which means it's a good idea to buy something that is discounted already by 50 or 60%. I would want you to highlight, or you or Dinesh could take this question in terms of why is this something that you'll avoid? Why is this your no-go list? So that people understand that, whatever is probably shared on an Instagram or let's say on a YouTube Shorts, what's the rationale to something of this sort not to be done?
So I think it's very clear, right? Whenever, they say, don't catch a falling knife.
Mhm.
Um, and whenever you are seeing steep corrections in the market or in a particular stock, it's always, sidelined for a particular reason, whether it's got to do with a corporate governance issue, whether it's
Mhm.
got to do with a bad result, whether it's got to do with a missed order. For us, we are always viewing a particular stock, we are always viewing a particular stock not only from that particular month point of view. We want to be able to see whether it's got good tailwinds over the next quarter or two. That will allow us to make sure that we get an upside in that particular stock or that idea. So to answer your question in short, um, you know corporate governance around stocks is extremely important. It's a benchmark which you need to create. You need to know whether there has been promoter pledging. You need to know whether the things are working more professionally for these organizations or not, how well structured they are internally as a team. These are all important features which we would want to sort of view at before we go out there into a particular counter. And like I said, when we are screening all of these ideas you will see are automatically eradicated from our list. They, let's say, something like, let's say, a Yes Bank, something like these smaller ideas where a lot of retail participation wants to sort of move towards, or let's say a Vodafone Idea, we know that maybe these are turnaround stories, but these are not turnaround stories yet from a fundamental standpoint, right? They can go out there, but today both of them, just since I gave these two examples, both of these stocks look good, but they look good over the long run, over the next 1 to 2 year period. We're not looking at over the short run point of view. So uh, they are still brewing as counters. There's definitely a lot of upside out here in some of these counters, but they don't fit in our bill from a SPIP stock point of view.
So in other words, if I were to rephrase this, we are predominantly looking at only stocks that have momentum or they have tailwinds available for a 2 to 4 month time period. And after all of this, there is no certainty that all we are going to hit. We're going to hit a 100% strike rate. There could be some of them that don't go in for whatever reasons. But long story short, all of these pointers that you missed out, that you've mentioned out here on this slide, it's to not chase stories that could probably turn around after 2 or 3 years time just because it's discounted. We are looking at counters that can help us get at least 2 or 3 or 4 odd % in a short period of time, which is possible. And mainly you're looking at uh, the point that I looked at is that the daily volume should be a minimum 1 lakh. So a micro cap or a penny stock will definitely
Yes,
not fit this bill.
correct, absolutely. Even
Next.
from a 200 DMA point of view, a 200 DMA is a very important level from a technical chart point of view. It gives you a sort of a momentum. If this particular stock is always trading above a 200 DMA, so that's one of the other criteria we do look at, because 200 DMA, I'm sure some of you guys do understand the technical charts, is a very important sort of a trend line. And whenever stocks are hovering above that, you will always see a lot more activity in that particular stock going forward.
Excellent. Okay, please continue, Prithvi.
So I think most of it I've sort of covered up. We when we are identifying our 7 stocks, there are 20 stocks which are identified. 10 come from the technical list, 10 come from the fundamental list, and then as a 5 member committee, they go out there and pick the best 7 which could work for them for that particular month.
At
Keeps
the point at this time, Prithvi, are you in a position to share with us a sample of how the research report looks like, what the investors do get before they finalize their picks?
Yes, so just a second. So this is the
And Prithvi,
latest report.
while Pratik is walking us through this one, what you can also do is please pull out my report if you have in terms of my investments and things, because I've not been able to log in for some reason. If you can pull that up at your end and then you can share the audience so that they know for a fact that this is something that I've got my money in as well. But yeah, by
Correct.
all means, Pratik, you can continue with this one. I mean, it would be nice if you can walk us through in terms of how do I make sense out of this.
Sure. So I think so. There you go. This is a report which is going to be emailed to you once you subscribe to our SPIP report.
Mhm.
This is how your report is going to look. Let's say, for example, BL is one of our recommendations for our November report. There you go. You will see a fundamental view on why we feel that this counter is looking fairly okay. On the left, you will see what is the market cap of this particular stock, what is the 52-week range of this particular stock. Similarly, on the technical charts, you will see the reason behind why we feel that an uptrend is going to sort of take off in this particular counter as well. And then ending by the shareholding pattern, which we have on the left hand side as well. So, it gives you a detailed study of what our buy range is, what our target prices are, what our stop losses are. We are one of those advisory reports where we believe that the initial 4, 5%, 6% uptick is what we are going to go and bet for. Versus if you see a stop loss, which is a much higher stop loss, than a target which is being provided to you. Now, if I may spend a few minutes on this, the reason why we have gone out there and worked on such form of a strategy is when you see a lot of volatility in the markets, the volatility is such where a 3, 5%, 7% stop loss automatically gets triggered very, very easily. However, when you are picking a fundamental stock with a technical bias, it's very difficult for them to go and hit a 20% stop loss. And therefore, for us to have a higher range of of a stop loss, that for us makes the product even more beneficial. And therefore, we believe that the ideas and the recommendations, again, which I had mentioned, that we are always looking for technical breakouts for fundamental companies which we know are going to go out there and give that particular value within that period of the next 1 to 2 months. Those are the ideas we normally go out there and we sort of review and pick out those counters from. So it truly works from a standpoint of making sure that even though we are working with higher stop losses, we are more confident about our lower targets being achieved rather than waiting on those stop losses. Even today, let me run through a period of, let's say, January, February of this year until, let's say, July, August of this year, where the markets have been completely flat or more in a negative sort of an environment. And even though we saw a dip in our performances, we still went on. We held on to these stocks for the period of 4 months. We saw recovery in some of these counters, not hitting our 20% stop losses, but maybe fairly coming back into even grounds or in a positive environment. So the whole idea here is that we feel these are the concepts which work much more better. It adds a USP to our product, which is different from a normal sort of an advisory product which you might be able to get everywhere, for that matter.
Pratik, you shared quite a few pointers, and I've got questions that I know my audience is going to ask. I'd like to know what are we covering after this, because I don't want to disturb the structure of the webinar. So, what are we going to be covering next? Because there are a few questions that are coming in the chat box, and I'd like to address them as well.
No, I'm happy to take the questions one by one.
Okay.
I think I have more or less summarized everything around SPIP. So I think from the research idea to the product in itself. So
Okay.
happy to take on the questions.
Lovely. Prithvi, can I ask you to stop sharing the screen, please? All right. All right. So, first of all, I'll ask the questions which I have made notes for. And while I know the answers, the intent is to voice it out so that the audience is well aware of this, right?
Sure.
Now, Pratik, you mentioned that the aspiration is to get a 16 to 18% per annum rate or return on the portfolio. And this is outside the charges, or this is inclusive the charges?
This will be gross. I would say if you take about 18% gross, there is about a 25,000 rupees annual fee for 84 stock recommendations in a year.
Understood. So, we will talk about the charges aside, but what you're saying is this is gross. Now, obviously, then we have long-term and short-term capital gains that we have to consider as well. In this case, it will be only short-term. There will be no long-term capital gains, and therefore that needs to be a part of the consideration as well.
Correct.
Excellent. Now that we've got that, I have Funny Kumar who has dropped in a message, dropped in the chat saying, how is this mechanism different from small case? Now, everybody on this call and who are going to be listening to this recording in the future, here it is. It's not, this particular product that LKP Securities is offering, the only way that it's different when compared to most of these robo advisory or platform based recommendations is that here you are not expected to take the transactions at the start or at the time of exit. Right? If you're being recommended by a small case or whoever it is for that matter, these are transactions that need to happen from at your end you will be punching in the orders, you will be placing the exits, which means you are going to be involved at the start and the exit. If you are not doing this, it depends on how the portfolio is going to move on. Now, small case again is very, from what I have observed so far, it is very thematic in nature, and that theme could be playing into years into the future, or could probably just be a quarter or two. Like, for example, there could be a defense theme. For example, there could be an export team, or there's just a change in policy guidelines because of the budget and everything coming. So there will be multiple themes. Themes will be a plenty. We need to realize and evaluate whether that theme is something that works for me. Now, to build on to the question that Funny just asked, I think it is paramount that we understand this offering is best suited for those of us who do not have the time, bandwidth, and the risk appetite to handle a large amount of portfolio at your end if you're looking at building a strategy with a large amount of allocation. Pratik did mention that it was a 10 lakh minimum. It is not at 10 lakh. We can get down at 5 lakh. The reason why we suggest a 10 lakh is because we pay a subscription fee of 24,000 rupees plus GST every single year to get to subscribe for these reports. Now, for the return on investment, if you're paying 24,000 plus the GST piece, if you have to get a return on this investment, when you're talking a 10 lakh number, if you're looking at a 15%, then it seems like, okay, this is worth the while. Now, just because to build on to what I was just saying a little while back, typically when we start exploring the markets, at least this has been my experience with working with the majority of you all, we tend to buy a little bit of stocks here and there, and this is bought with no strategy, with no long-term focus in mind, which means, okay, let me try. If it works, great. And we are just one bad market cycle away from washing away a good 50 to 60 or 70% of our portfolio, or we automatically become long-term investors thinking that, okay, sometime in the future, the markets will go up. Yes, markets always go up in the long term, but not necessarily our stock should. Pratik just pulled out a couple of names like a Vodafone India, like Suzlon, like a Yes Bank. At some point in time, these were darling stocks, and they were like they were supposed to be the next best thing. From being a part of the Nifty 50, and now I don't think they are a part of the Nifty 500 as well. Again, I'm not very I'm not very informed on the stock market piece because, like I said, this is not something that I do on a full-time basis. My time goes in terms of evaluating which funds are working for us, which funds have unique offerings and things of that sort. Stocks is something that I don't put in my time as much, and I have a very small allocation. It's no more than 10% of my entire investable corpus that I have an allocation over here. So, Funny, I hope that answers the question in terms of how is it different from small case, or for that matter, any other platform that recommends stocks which we need to do transactions on our behalf. Over here, what happens with LKP Securities? Once you subscribe, you're getting a research report. If you do not reply to the report, then the stocks are taken on your Demat. If it is, if you reply to it saying that, hey, out of the 6 ones, out of the 7, I don't want you to take in 1, 2, 3, whatever that story is. Then they will take the stocks. Then they will take the positions on the remaining stocks that work for you.
No,
But
no,
this
no.
is going to be
Sorry, so Sharath, I want to add out there.
okay.
That's not going to be the case. I have been reading some of the questions which are being put on the chat. Let me make it candidly clear that we are, if you like, 4 of the recommendations for a particular period and not other 3, what happens? Well, we will make sure we are investing in all the 7, because today when we are giving out a performance, our SPIP performance is based on all 7 recommendations. Today, fortunately, unfortunately, if you pick 4 out of the 7 and then we go out there and underperform, then the gun is put on our head, right? That why is the performance poor, right? So the idea here is that we will only be going out there and picking the 7 as a complete basket. That is the way which we would want to work. If today you are only subscribing for the advisory report, if you have decided that you don't want to do broking and you want to do it by yourself, that choice remains entirely up to yours, whether you want to do 4 or 2 or 5. That's entirely up to yours. But from our standpoint, if we have to showcase our performance, it's important that all 7 are to be invested in, and then you get a fair color of our returns.
Understood. Okay, so then let me, because I didn't look at it from that angle. So Pratik, what you're saying is the off service that you'll offer is you'll offer a research report of having to pick up 7 stocks every single month. Right? This comes out on the first week of every month with a holding period of anywhere between 3 to 4 months. We could exit this in profit or losses, depending whether we hit the stop loss or the target price sooner or later than 4 months. Is my understanding correct so far?
Yes, and if a particular stock is still open after 3 months, whatever that given price is that particular last day of that 3 month or 4 month, we exit on that day. So let's say if it is flat, it's flat.
Understood. Okay. And one is the research report. One service is the research report. So people can subscribe to the research report piece. And if they are choosing to do this by themselves, they can do it on any Demat account. It is up to them. They can select which of these 7 recommendations work for them. But if they're wanting this to be done on autopilot, which means the report is coming and
Yes,
the transaction goes, then they need to have the Demat account with LKP Securities, obviously, because that's when your team is going to be able to do these transactions at the back end.
correct. So that's the question of Ms. Pallavi Nanda, that yes, if you are executing your orders with LKP, then yes, a Demat account will be open at LKP.
Understood. All right. Funny, you still have your hands raised, so you can unmute your line and ask the question.
So actually, that question just got answered. So it is my. I mean, I was just thinking of if the orders are done based on LKP, is it like the Demat account has to be there? And in that case, it's like kind of a between PMS and this, right? So it's wherein they can. I mean, of course, PMS don't ask your permission whether to execute or not.
No,
But
they do. You have the choice. That depends on what kind of volumes you're bringing in. You need to have a 5 crore kind of ticket size in
yeah.
place.
So it's more of like it is if we have a Demat account with LKP, it is like and once we give a
Not really,
confirmation, they
not
will do.
really. And funny, I'm glad that you bring this point. So I'll give you a differentiation in terms of how this is different from a PMS when compared to what we're currently doing. See, a PMS, the focus, nobody will come and tell you in PMS that, okay, next 1 year, I'm planning to give you this kind of return, right? The idea is the PMS gives you flexibility that is not available in mutual funds, but it's not as very tax efficient when compared to mutual funds and PMS. However, when you're looking at this kind of recommendation, the idea is you're not looking at a long-term hold. You're looking at picking up stocks that have momentum between 3 to 4 months. For example, I'm sure you're looking at stocks, right? Even if you're tracking the US markets, there will be certain stocks that, okay, in 4 months' time, they gave you 20%. But when you look at over the next 1 year, they were more or less zero. Like, for example, let's look at Indian markets itself, right? Last September till now, we're almost on a zero something, 0.2% or whatever it is. But for those of us who decided to come in at the time when the markets was corrected and we did invest in the small cap, irrespective of what kind of, shor sharaba was there at that point in time, we managed to get 25% in less than 9 months' time. My point is, from time to time, out of the universe of 4,000 or how many other scripts that, the LKP Securities team looks at, we will have a few stocks that will tend to generate a 1.5 or a 3% kind of return per annum or for the holding period. Net, even if they are saying 15 to 18% on this recorded line, I would like to highlight, we might also end up having 0% returns if the market doesn't move at all. There could be times, in fact, there will be times that out of 10, 8 calls, or let's say only 8 calls or 7 calls go right. But the reason why we're proposing this at this number, when compared to a PMS, you're putting a minimum ticket size of 50 lakhs. In 50 lakhs, can we average out? No, we cannot average we cannot average with smaller amounts of money. Now here, let's say we begin with 5 lakhs and tomorrow, let's say you see the markets are going down. You can bring in an extra 1 lakh rupees and then equally get your money distributed across the 7 other alternatives that we have. But you cannot do that in a PMS. The PMS is meant to do a long-term investing, right? So the idea of getting this particular proposition is more or less the exact same thing what we were doing with India Infoline some time back. The difference was I don't want this to be an operational challenge for you all or for me. Right? So all the operation hassles that came in terms of picking up stocks is avoided completely. Okay, ladies and gentlemen, those of you who are dropping messages in the chat box, if you all can, please voice this out by unmuting your lines, turning your cameras on and asking the questions, because after some point in time, asking all these questions or reading through all these questions can get a little too time consuming. So I'm absolutely fine if you all can, raise your hand icon and ask these questions, right? Girish, you seem to have a question. Would you want to unmute your line, please?
Yeah, sure. Yeah, good afternoon, everyone. Like you are recommending 7 stocks every month. Uh, do you recommend how much proportion to be allocated to each fund, or sorry, each stock? For example, if I want to invest 1 lakh rupees, then do you also recommend, okay, 30 or 40% of this amount should go to this stock, or 20%
No,
should?
we equally distribute the capital across all the seven stocks. So let's say, for example, if you put 7 lakh rupees, then we will buy 1 lakh worth of each stock recommendation in that particular report. Sorry, you've gone back on mute, Mr. Kulkarni.
So you recommend equal distribution
Yes,
every month?
yes.
Okay, fine. Got it. Thank you.
Just to add on, you remember how we do our SIPs, right? Like on the internet, you would see, okay, put 20% in mid cap, put 40% somewhere else. We don't do that for all, because the approach that we have when you're looking at diversification, you're looking at diversification across sectors, across industries, and across different stories. Now, we are not sure that all stories will play out as per our requirement, and therefore have it distributed equally. And that's why if you see our SIPs also, when we do, irrespective of how much ever amount you're doing, we are doing it split across all funds equally.
Okay.
Did I help, Girish?
Yeah. Thank you.
All right, excellent. Please mute your line. Naveen, I see you have raised your hand. You can unmute your line and please turn on your video.
Yeah, hi, Sharad. So, a few minutes back, it was mentioned that the returns are calculated if we are investing in all 7 recommendations, right? And that
That's
is how it
correct.
happens at the end of the year. If we go by that logic, then we would also be required to invest every month, right? Because if you're investing in all 7, and then let's say it's 12 recommendations, 12 months in a year, I decide to invest in, let's say, 6 of them, and say no to the rest of the 6, and then at the end of the day, the ones that I participated did not perform that well. So I mean, the point is, then we have to maintain capital at least for 3 to 4 months, because after 3 months they said they will just exit whatever the price is, even if it's hitting the stop loss or even if it's not hitting the target, they will just exit. So then whatever capital we are trying to put in every month, we will have to have at least 3 to 4 months of that for recurring investments, at least, right?
Not really, Naveen. I know the answer, but I'll let Pratik or Dinesh take this.
So, Naveen, thank you for that question. The idea here is that most of our stock recommendations, we see ourselves booking profits anywhere between, let's say, 40 and 60 days, right? So, normally, I would say a bi-monthly investment, which is then rotated for the remainder of the year. So, let's assume you put 5 lakhs in the month of December, 5 lakhs in the month of January. When the February report gets issued, by then we expect your December money to get free, and then that money gets rotated into the February month. Does that make sense?
Naveen, your line is on mute. Sorry. Naveen, your line
Your
is on
line, no.
Yeah, I mean, in an ideal world, but otherwise the maximum it will go to is 3 months, because otherwise for the December recommendations you will anyways exit in March.
Yes, so there could be one or two stock ideas which could be open. Sure, that can be a possibility. But I'm saying on a holistic picture, whenever we have seen the momentum, we have normally seen within a span of about 50, 60 days, most of our profit or stop loss gets hit, and then the money is again availed for you. There are also times when, momentum market, maybe in the first month also your money gets hit, and your profits are booked, and then your money is just sitting idle, right? So that can also be another flip side to that.
Got it. Also, now that I'm already speaking, if there is any possibility of seeing what the returns have been, I'm very interested in seeing September last year. I think 25th, 27th, somewhere around that is when the markets hit all-time high, and now again, right? So, but there has been a big dip in between, and then it's come up again. So, what I want to see is from October last year to maybe about May, June, when the markets were in the downtrend and then they stabilized, what kind of returns were we able to generate in those months?
So in
Sure.
other words, what you're looking for, Naveen, is you're looking for the strike rate. Out of 7 of them, how many of them went well, how many of them did? Let's do this. Prithvi, do you have a report of this sort that shows the strike rate? Okay, please have that pulled up. While you're pulling it up, tell me when you're ready, and then we will address this. But other than that, Naveen, is there any other question?
No, all good. Thank you.
Okay, great. Now, one second. Prithvi, don't share that just as yet. Pratik, I wanted to understand. See, I don't want my audience to increase their allocation unless there's a drop in the market, right? And let's say we are doing either 5 or 10 lakh, whatever that story is, right? How do we handle the equation then? Now, because let's say if I'm putting the money starting December 1st, okay, I got December's report, great. Now I will get a report again in January. But since all my capital is already invested and I don't want to infuse fresh capital, what happens in that case?
So just the way I answered Mr. Naveenji, it's important that you go with a mindset of investing, bi-monthly for a rotating period for the rest of the year. So it's
Mhm.
important that you analyze your investments for the month of December and the month of January, and then you work on a rotation from there on. So it's important you have that as a mindset.
So let me rephrase this. Let me rephrase. If I'm coming with the mindset that I do not have surplus money and I want to maintain, because the framework that I've set to all my audience, do not put anything other than 5% of your entire investable net worth in an asset class where you don't understand or you're not in charge. Right? It depends on various other things. So let's go with a number that we're talking only 5 lakh rupees. Now, if I did in the month of December, I don't have additional money to invest in the month of January, February, March. I will wait till the time my portfolio executed completely or exited out of completely. Then that balance will get invested in the next month whenever it's available. The loss that I'm going to face here is because I'm paying a yearly subscription. And if I'm not generating that much money, then is it making sense for me to park this money or not? But on the
Exactly.
flip side, I can also evaluate whether this is working for me or not with smaller amounts of money, at least for 1 or 2 years, because these subscription charge could be a total of 50,000 for 2 years. But at least that way, I know that I'm not going to be booking major amount of losses if the strategy at all were not working. So I can do a dipstick for a smaller amounts of money instead of doing a large amount of allocation of 20, 25 lakhs or whatever that story is. Is that correct?
So I would only want to add to the factor that today, if you're putting 5 lakh rupees, um, I would say you put 2.5 lakh rupees in December and then 2.5 lakh rupees in January. That's the best way for you to get the best performance and the best results
Very
coming
nice.
out of this particular report and advisory report. Yeah.
Got it. So in other words, 7 stocks, take it in multiples of 7 lakhs, right? If you're doing it, then 3,50,000 could be one, and then we keep building it up that way so that
Yeah,
we have enough allocation available throughout. Excellent. Thank you
absolutely.
very much. Nagbhushan, I see you have, okay, before I take your question, Prithvi, can you walk us through the year-wise performance, please?
So this is this financial year.
No. See, Naveen now will be very smart. He will say, don't show me April and everything, show me from September onwards. So let's go from
Okay.
September.
I think we can just showcase the yearly performance as well if you want. Maybe
Sure.
that's a better. So Naveenji, last year was a subdued year for us from a performance standpoint. Everybody needs to see the last slide of the average return on the extreme right. So if you look at the last 5 years, there has been one negative year of 24-25 where we did a negative return of negative 2.7%, versus the rest of the period. I have, of course, mentioned a reasonable 16 to 18% in my conversation. Like you're seeing, there is a higher return, which is about 18%, which is inclusive of your advisory fee. So if you see, your advisory fees is definitely accounted out here as well. If you look at the gross return versus the average return, so when you look at the average return, your advisory fees is already accounted for that. And then over and above that, you can see an average return of about 18% year on year. So that's where we stand. Last year was obviously challenging, but I think we have done fairly okay compared to maybe a lot of mutual fund or PMS portfolios across.
So, Naveen and everybody else on this call, and those of you who are going to listen to the recording, please note, just because there is an advisory fee that you're paying, just because there is a 66-decade history that is coming along with LKP Securities, there is no assurance, and absolutely no assurance that you will have no losses being booked on your portfolio. Just like everything else, please make it a point to allocate money only after that certainty that there can be losses, and yet there can be profits as well. There is no 100% thing that it will always be in the green. This is very important that we keep in, because sorry.
Just on a lighter note, anybody who's giving you 100% insurance, don't do their product.
All right. Having said that, Nagbhushan, Prithvi, can I request you to stop sharing the screen, please? Yes, Nagbhushan, unmute your line and please ask your question.
Yeah. Good afternoon, all. Sorry, I'm too beginner in this area, so my lazy.
But then you had a much larger stock portfolio than a mutual fund portfolio before we began. But nonetheless, please go ahead.
Yeah. So my basic question here is that we say that we get the recommendations in the first week of the month, and we fix up, let's say, whatever is the amount with minimum of 1 lakh, let's say, as the cap, right? So is the expectation that as investors we have to ensure that these amounts are transferred from our bank account to the demat account, etc., be made available on the cutoff period, month on month, let's say 2 months in sequence, correct? We ensure that the funds are available all the time, so that it enables the company to buying shares. Is it like that, or will they just give us the recommendation and we will have to operate something while buying and selling both?
No,
Depends on which
we will.
service. Sorry, Pratik, go ahead.
No, we will just be providing you the research report. And like I said, there will be an SMS which will come to you
Okay.
stating, would you like to execute basis on this particular report? You
Mhm.
need to reply with a yes or no, because we require a pre-trade confirmation for this. And beyond that, basis your reply, we will execute the orders if you say yes. And if you say no, then we don't execute the orders for that particular month.
Okay. And this applies for both buy and sell both. Sorry, can't hear you.
Sorry.
So if I can
Prithvi,
take
1
this
minute. Okay, I accidentally got you, or I muted your line. Sorry. Please continue.
For sell, no, sir. For sell, we do not make that call. Like my colleague shared the report with you, there are targets which are being given. When those targets are hit, we automatically square up the position, because otherwise I will have to be chasing you very often in a month, to say, sir, target is hit, so please, okay, that transaction, right? So
Okay.
that's why we don't do that.
Okay, that helps us.
Nagbhushan, just to add on, this is only if you choose to have your demat account with LKP Securities. That's when they can initiate this on your behalf. Otherwise, it is just like any other platform. You will have to initiate these transactions on your behalf, which means you buy, you sell, you keep a track, all of that. I'll tell you what I have done. Obviously, you'll know how much of time I have and how much is my interest in all of this. Therefore, I've opened an account with LKP Securities. Yes, another demat account. Yes, another account to pay CDSL and NSDL charges. Yes, another account to submit at your tax return time. Nobody said making money is easy. And again, like I said, if there is another opportunity and somebody else can take my time, that's the reason I've chosen to take a service where they will be transacting on my behalf. So to answer your question, if you choose that same option, once you have your demat account opened with LKP Securities, like how we have our NAC mandate, you will have the money already transferred. When that report is on, you will be told that, okay, the report is on. Do we want us to do the transaction? Okay, excellent. Please, thank you, Nagbhushan. Mute your line. Zubin, unmute your line and go ahead with the question, please.
Hey Sharad, hey everyone. So what I wanted to ask is, you guys already partially answered the question, saying that we'll go for bi-monthly, but will that be a good idea where we have the allocation, say 10 lakhs, and we divide it for each month, the fund, and we participate in every cycle, will that give more efficiency given the past records?
Absolutely. Bang on, Zubin. That's exactly where you will get the maximum feel of the product. So it's imperative as far as we are concerned that there is obviously a participation in every single month, because that's the sort of performance which we are showcasing to everybody. So yes, it's the best way to go out there and break that allocation into 2 months of sort of investing, and then rotating for the remaining periods of the month.
So in other words, Zubin, just to build on to what Pratik mentioned, and given the fact now that we can go in cycles, the best idea is have a minimum portfolio of 7 lakhs. If not 7, then you go in multiples of 3.5 lakhs. Why? 3.5 divided by 7 is 50,000 rupees, right? 50,000, 2% on 50,000 is enough dent to feel the, to see that, okay, this is sizable returns that you're happy to show. Otherwise, you can do the same thing on 5,000, but how does even 20% make thing? When we're looking at volume, sometimes those volume numbers need to make sense, right? And from a effort and time involved standpoint.
Understood.
Did I help? Excellent. All right. Funny, you've raised your hand. Unmute your line. Ask the question, please.
Yeah. So I don't know whether it was discussed earlier, but just want to understand all the charges, both in a case where like we are opening a Demat account with LKP, or otherwise. I mean, if we magically pull a time to execute whenever they ask us to do, but I just want to understand all the charges that we need to pay to
We didn't
LKP.
cover this, Funny, and the
Okay.
reason I didn't cover this because I would be putting this on an email, as you already know, right? Whenever we introduce a new product. But there are 2 charges. One, first of all, there's only one charge if you choose to only take the advisory aspect of it, which means there'll be 24,000 plus GST. And that will be the end of it. If you want LKP's team to initiate the transaction on your behalf, then there will obviously be a brokerage charge that will be charged on your Demat account. Okay. Those charges can be anywhere from as low as 0.25% to 0.5%, depending on the portfolio size, which I'm yet on negotiation terms with the LKP team, and depending on what kind of volumes we generate, because for them at the end of the day, it's a resource that they need to put in each desk when they are doing this activity. Depending on either the size or the number of people that are going to be doing this, we can work the numbers out. But one thing for sure that is 24,000 plus GST for the year.
Okay. And then just one question. So we'll get a report start of the month.
That is correct.
And then if they see that it hits the target, then they would be selling it maybe any time of the month, right? Just want
That is
to
correct.
understand, because the opportunity, why it is start of the month. Just it's more of a curiosity question. See, because the opportunity might arise at any time, right? So why it is only start of the month? Didn't understand. So of course they would be just keep looking at or keep studying stuff, but then opportunity is not aligned to a month or.
So there is no there's no physics or science to that. It's purely a question of saying, okay, it's a new month. There are new sort of data points which come out from different countries, different sectors. For example, you get the telecom showcasing the number of users in the first of the month. First of the month, you have the auto companies showcasing the number of car sales they have had. So I think it's a lot of data points for us, which then allows us to maybe take a little bit more sort of clearer guidance. But in all honesty, there is no science to that, sir. It's more from a convenience point of view for our investor as well as for our team to be able to structure ourselves in a particular manner, and then work in due course.
Okay, thank you.
And Funny, I'd like to add, build on a little to what Prithvi is saying. To what Pratik just mentioned. Apart from the data points that is available, which is the fact, right? From an operation standpoint, we need to make sure that it is scalable, right? Randomly, if you pick up stocks at the start of the month and some at the mid of the month or some at the end of the month, we will run into the same trouble that I was running into, right? And I was doing this with just about 22 or 23 odd families. Here, our community itself will be upwards of 100, right? So this way, when we got 500 other brokers, or rather 500 other franchises, which means 500 other people like Sharad, imagine the kind of audience that we're talking to. So the idea from a logistics and from an operation standpoint, it would make better sense that we have a timeline. it is okay that we might miss out some deals, during the mid of the month or whatever. But from a sustainability and from a logistics standpoint, it makes better sense that it is all done at a particular date. Is that okay?
Yeah,
Pratik?
and just if I can ask a follow-up question, just I mean for the doing a mental math, right? Let's say we are reserving 7 lakhs or multiple of 3.5, whatever to this. It's more of like we can say, yeah, things gets rotated in that account, right? So
That is
that's a
correct.
fair to do, apart
That
from
is correct.
whatever the charges that has to be paid. But then from a money perspective, we'll just leave it there. And anytime if you want to bump it up, then you would do it at another 3.5 and in the multiples of 3.5,
That is correct.
right?
That is correct.
Yeah.
Yes.
Okay. Yeah. Got it.
Nothing
Thanks.
is stopping you to do a smaller amount as well, funny. But like I said, it just helps the averaging work out much better, because tomorrow you will say, hey, you know what? Bulk of my returns came only with my second or the third installment. But then if we are putting smaller amounts of money, then averaging doesn't make sense, because like what Pratik just mentioned a little while back, we have an annual return that can show across the last 5 years and how the last 5 years have performed. Right. At the end of the day, we are not looking at getting out of the park kind of returns. We want that same 12 to 15% return in a short-term basis without us having to disturb the apple cart that we currently have, which is our mutual fund portfolios.
Yeah. Got it. Yeah.
Right?
Thank you.
And at the same time, you don't have the fear of missing out in terms of, oh, okay, my friend, colleague, neighbor, drinking partner, whatever the story is, they are participating and I'm feeling left out. The Sharath doesn't allow us to participate in markets, or whichever way you like to go, or you are expecting. But nonetheless, jokes apart. Did I answer the question, Funny?
Yeah. Thank you.
Okay, not completely, but then I'm assuming there will be a personal call that we'll have nonetheless. All right, Ravi, I see that you have a call. Would you want to unmute your line and please turn on your video?
Yeah, so I have a couple of questions. One is you mentioning that 7 lakhs amount. Is that like the minimum ticket size, or how does that work?
Sir, you can put 7 lakhs, you can put 70 lakhs, you can put 5 lakhs. It's absolutely up to you how much the client wants to do, how much he is sort of comfortable in investing with us. Of course, we have seen people start with smaller amounts and then increasing their amounts to larger ticket sizes over a period of time. So it's absolutely dependent upon you. The idea
Okay.
here is that why we are marketing it as a minimum 7 lakhs or a minimum 10 lakhs is that today the our advisory fee is justifiable, our brokerage fee is justifiable, and then there is an absolute return which you will be getting also on your portfolio. So therefore we work from our presentation from that particular ticket size point of view.
Okay. And then if we are going through your firm for investing or executing these transactions, do we have to park that money with you, or?
Yes, yes, sir. So we are members of the exchange. We are regulated by SEBI. We have to follow the compliance norms of the regulator. So today, I don't know whether you have a broking account, but normally when you are investing through a broker, you will have to go out there and put the money through them. So the same formalities apply to us.
Okay. So, which means at the beginning of the month, when you send this report or recommendations, at that time, if we are interested, we need to make sure that the funds are parked with you.
Yes, yes.
Okay. And if you don't go through your firm for executing transactions, and when the target price is hit, will then also will we get a notification for us to sell?
No, so we don't do that because, like I was also answering another gentleman's question, we don't call up our clients when a sell target is achieved because that is already part of our report. So if you see our report, there is a range of a buy price, there is a stop loss, and there is a target range. So once the target range is hit, if the committee feels that is the right time to book the profits, they will take a call to book the profits. In that case, we are not going to come and nudge our client very often. Otherwise, there's a lot more disturbance to the client in that particular month.
Yeah, I understand that you will go ahead and execute the sell transaction, but that is only if we have a Demat account with you. If we
Yes.
don't go with that path, then we have to track that. Is
Yes, sir, because then it's like a normal advisory product where you're just subscribing for the report in itself. Like another gentleman, suggested, what if I want to participate in 4 out of the 7 ideas, right?
Mhm.
Same case scenario is where you're just then, subscribing for the advisory report. Then it's up to you whether you invest in 2, 4, 6, or 7, and at the same time, it's up to you when you want to feel like exiting as well. So works both ways.
Okay, all right, understood. Thank you.
Thank you.
Does that answer all the questions you had, Ravi?
Yes, Sharath.
Okay, excellent. Thank you very much. Please mute your line. Mansa, I see you raised your hand. You can unmute your line. Go ahead.
Hi, Sharath. Hey guys, I had a couple of questions. So if in case you, in the stocks that you have suggested us, and we park, say, 7 lakhs for the first month, and out of those 7 stocks, one, you get a new data point saying that the stock is going to go down, then in that case, will you manage in selling the stock and handling everything on our behalf? That's a yes. Okay. So the second thing is, he suggested that we lock in the amount with him for a particular time, like 7 lakhs if we want to invest, and if we are breaking into 2 months, then it would be 3.5, 3.5. But what if I want to keep this 7 lakhs parked with them for 1 year, or say 10 months, and then they can take bits and portions of it every month? Is that no?
Let me help you with this, Mansa. I'll take this one. Okay. See, the approach that we are going to be doing is, we know for a fact 7 stocks are going to be taken, right? And for us to have a meaningful return on this product, okay, because I don't see any of my clientele, at least with discussions with me, having more than 5% of the allocations going directly into this alternative. Because whatever said and done, this kind of strategy, when compared to long-term investing, a long-term portfolio will always eat this strategy for breakfast, right? It is during the volatile times like this where you want to, okay, when the markets are moving sideways, you at least get some kind of participation, or at least feel that, you're not feeling left out. And quite frankly, that's a majority of my audience right now. Like, Sharath, why are we not doing stocks? Why are we doing only mutual funds? Because the world is talking about this. So my point is, from a more strategic and not a tip or a reel based advice, let us have one small percentage of our allocation kept aside. Okay. Because the strategy works in a manner where we have to take participation every block of second month or every month at numbers of 7 stocks, take in multiples of 50,000 per stock, a 3.5 lakh portfolio. Which means if you're coming on board, come on board with at least 7 lakhs, because then we got that cycle taken care of. Missed 10.5 lakhs, or wait, 11.5 lakhs.
Okay.
Or 10.5, sorry, yeah, 10.5. 3 months is taken care of.
10.5.
Leave
Yeah.
yeah,
No, I'm
so,
just saying. No, it's just 10.5.
yeah, sorry, 10.5 lakhs. First 3.5 lakhs will go in the first month. Next research report, the next 3.5 lakhs. By the time the money gets released from the first lot, then that money will get redeployed. So in other words, you come with a mindset of 7.5 or 7 or 10.5 lakh number.
Okay, got it. Sharath, I have another question. Suppose every month they're going to suggest 7 stocks, and then I can always reply and say, hey, I want to take it in this round.
No. You are either in or you are either out.
No,
For
I
example,
think he said we send him an email, right? They inform us about the 7 stocks.
rephrase. If you are choosing for LKP Securities to do the transactions on your behalf, which means the transactions will always be taken. There is no 2 ways about it.
Okay.
You have a choice when you are going to decide to act upon this at your end from your Demat account.
Okay.
Let's say if you have a Zerodha account, or you have anybody else for that matter, and you're diligent, you're of the opinion you are going to be very prompt and you can manage this entire recommendation piece by yourself, by all means take it on your Demat account. Then you can choose which one you have to, which one you don't have to. And Mansa, I would suggest not just you, but to everybody else, that is a flawed strategy. In spite of the kind of research that I do in terms of taking up the different stock mutual fund picks that we do, we've known some of the schemes don't just work in our favor.
Yeah.
But just that one doesn't destroy the apple cart for all the other ones that we've got for ourselves, right? Therefore, for all practical purposes, if there's a strategy and you're not in control, the best idea would be to do 100% participation, but don't pick and choose. It generally doesn't work. I can say this because I've not just looked at LKP's offerings, I've looked at a couple of other people's offerings as well. And it's the same case. The average pricing works out better instead of picking and choosing.
And Sharath, when do we exit? Like, when can we exit from this?
Didn't you just notice, Mansa, Pratik mentioned, right? The exit price is already mentioned. When the price hits
No,
the
no, no.
target or
I meant to say that. Can you go to some other place? So there
when
are
you pull out your
three
money.
cycles. So 10.5, if I invest, I'll be in 3 cycles. And then the money keeps rotating.
That is
When
correct.
and how is there a point when I exit completely out of this?
You can exit at any point in time. For example, if 3 months the numbers are not going well, and you're like, you know what, screw this, not making sense, exit. There is no lock-in.
Okay.
You can pull out your money at
Okay.
any given point in time.
Okay, got it. Thanks, Sharath.
Excellent. All right, Harish, I see you got your hands raised. You can unmute your line and ask the question, please.
Yeah, sure. I actually joined a few minutes late, so don't know whether it was already covered. I have actually 3 questions, and probably you can guess which ones.
Okay, before you ask, Harish, 1 second, I'm sorry. Ladies and gentlemen, for those of you who do not have questions, you can drop off the line because we had kept allocated 1 hour for our call today, but like every other call, our Q&A goes longer than the actual session. So those of you who would like to be a part of the Q&A, by all means be. But for those of you who have other things to attend to, you have to go out for lunch, absolutely fine. You can drop. Like the process will be, I will give you all a recording when it's available, and I will have all of this documented on an email as well. And for those of you who obviously want to get in touch and discuss this one-to-one, we will do that during our next review. So there's no rush over there. All right. With that said, Harish, please go ahead.
Yeah. So my first question is like, in what ways this is different from small case? Okay.
Already
Um,
covered.
I mean, maybe that's what I said.
Right.
Maybe I joined a few minutes late, so I must have missed. And second question is that the profit that you make on this investment, that also gets rotated along with the initial capital. So it's like you're compounding on it, right?
That's
Okay.
correct.
And I think one of the questions I had put in the chat.
Let me answer the first question.
Sure.
Small case and any other recommendation platform is completely dependent on how accurate the platform is, or how accurate the research is. How accurate is it, and for what kind of an audience they are addressing? Okay. The proposition that I'm giving to my audience is that you open a Demat account with LKP Securities for that one simple reason that the transaction can be done at the end of LKP Securities. So those of you who are in a position that you can take these trades by yourself and exit by yourself, keeping all the timeline, stop loss and everything, then you don't need LKP's help. You can just use a research report if you need to. See, since you brought small case out, Harish, you remember when you had the defense team. Now tell me honestly, is the defense team playing as well as it was 2 years back?
No, not really.
Right? When
Well,
the defense team is
they
coming out
also
from
already
small,
made a lot of money, so
that's
it makes
exactly what I'm
sense.
saying. That is exactly what I'm saying. In small case, they only come to you and give you a theme. You want to participate in the theme, you participate. They tell you the reason why it is, but there is no exit, no criteria there. Then there are some other platforms that say, okay, this is the research report. Why go to other platforms? You take most of the broking houses, they only come with their quarterly, half-yearly kind of report saying that, okay, this stock we expected to go this high, this low and all. Choice is whether you want to take the decision or not.
Yeah. I mean, in small case also. So depending on what kind of small case it is, high risk, low risk, medium risk, whatever, there is a rebalancing that happens. Okay. And some small cases do the rebalancing of their portfolio on a need basis. Some are fixed, like
Okay.
fixed term. It can happen every month. It can happen 3 months. It can happen 6 months. It can even happen within a month, depending on which small case it is, right?
Right.
You as a investor has the choice to go ahead with the rebalance or not go ahead with the rebalance. That also option is with you. Okay.
Right.
It's just that the action is with you. On the app, you can say, yes, I want to go ahead with this rebalance, and then you can, do the rebalancing and adjust. So it's easy and convenient that way. I just wanted to know like how's this different? Because the advisory report also gives you recommendations, which is like, okay, buy this, right? The selling part where you may not have to take action, they will take on your behalf. But the next time next 7 comes, it's again like a rebalancing. sort of, right? We are going to invest in these 7. It's almost similar. In terms of return, small cases also do not promise that we're going to give you this much return. It can be, they just show you XIRR. You can see what was the return in 1 month, 3 months, 6 months, 1 year, 3 years, 5 years. So that transparency is there. So nobody is guaranteeing a particular return. So I'm trying to understand, how is this going to be different? It's just that the LKB will have a demat account and they're going to execute it. Is that the only difference, or there is more to it?
From an execution standpoint, that is exactly what it is. Return numbers completely depends on whose expertise is large enough and who's more thorough from the research standpoint. So it's a choice.
I think
We-
just to add to what Sharath is saying, I think every advisory report will have some form of a USP. Ours is more focusing on the top 1,000 stocks of India, and within these 1,000 stocks, we identify a basket of 7 stocks every month where we feel are in the right momentum, where technicals are looking good, and therefore we put those 7 stocks forward to our clientele. Like I said, other advisory reports could be sector specific, could have different stop loss variations, could be more short term, could be more long term. So I think it's a question of what suits your sort of thought process, mindset, investment thesis. Basis that, I think, is where you'd be in the right position to take a call. Otherwise,
Yeah,
of course, there are one in plenty. I'm sure when you go to small case, you will find many, I mean, thousands of sort of advisors out there. It
and
is
you
a
can even create your own small case basket. Like, for
correct,
example,
or you
based
can
on
create your
your
own small case.
advisory
Okay,
report, I can
one
create one.
sec, guys. Sorry, I'll have to cut off because otherwise this will go in a very personal kind of transaction.
Fair.
Harish, long
Yeah.
story short, it need not be binary. It can either be this and explore another one. Need not be that this might be better because, like I said, if you're coming with 4,000 mutual fund scheme, just because Quant did well 2 years back, that doesn't mean it's going to continue doing well. Right? Everyone moves in cycles. Sometimes some fund houses have a good time, some fund houses don't have a good time. And that's why we move in cycles. And the point is, if your bandwidth allows you to, by all means, explore another alternative. There is no necessity that you have to. And with that, we will call it a day because otherwise I want to be mindful.
Yeah.
I will stay online with the rest of it to answer, but I don't want this to be, just having a conversation between 3 of us.
Sure. All right.
Thank you very much.
Thank you.
Did I miss out any other question? You said you mentioned you had another one.
No, I mean, that was more about the rebalancing. This has a very fixed rebalancing sort of schedule versus maybe as needed. So that I figured got up. Yeah, thank you.
Excellent. Naveen, you've got your hand raised again. Is that a new question or was it from the last time?
New question.
Okay.
Just a quick one. When we get the report at the beginning of the month, and if LKP is executing our orders, I'm traveling, not able to say yes to the email. Do they still?
You don't have to say yes. The only time that it doesn't go through when you've said no. Otherwise, when they've sent you a report, the transaction, you have to ensure that the money is there. The transaction will happen by itself.
Okay, because I think at the beginning of the call, he mentioned specifically that we have to say yes or no.
I'm sorry. I think I might have been mistaken. Am I giving some incorrect information, Prithvi?
Yes, you have to say yes either on email or if you give me permission, I can call from a recorded line. And if they say yes on the call as well, that's fine. But you have to say yes or no. If they say no, obviously it won't go. But if they don't say yes, then also we will not buy.
Okay,
So
I'm sorry.
have to be said.
I'm sorry.
Yeah.
Incorrect messaging. For all of us on this call again, full disclaimer. On a monthly basis, if the report is coming and you do not respond to or don't reply to, the order will not go through. You will get the option of having a call coming from a recorded line, and obviously when the account is opened, you will have the telephone number, so you can save that as LKP Securities. So you know for a fact, okay, to take this call, and it'll just be done. All of this will be done in less than 10 seconds. So that is that.
Yeah. I'm sorry. Can I just follow on question? So I'm chiming in. So so is it like there is a time period within which you are supposed to respond, or I mean it's like not. I mean I'm saying is yes or no, right? So is there within a day, or just want to understand what is the response time.
So preferably on day one, when the report is live, before 9 a.m. preferably, so that we can buy at the correct prices. But it could be we buy throughout the first week. So that is okay if you are out of town or something. But preferably on day one before 9 a.m. before
Okay.
market hours.
Okay, thank you. Yeah.
Thanks. Okay, Sandeep, I see you raised your hand. Can you unmute your line, turn on your video, and ask a question, please?
Yeah, hi, Sharan. Hi, everyone.
Go ahead.
So, one quick thing for me is like, in terms of the amount getting invested, right? When we are saying the balance has to be there. So, is it like, when we say 3.5 lakhs per month, right? On a cycle of 7 lakhs, has to be there in the account for 50,000 as a minimum investment,
First stock.
right? For a first stock. So, now let's say on a second month, we have like, a couple of investments which are already done in the first month or pulled again and sitting in the account. So let's say second month rather than 3.5, we have 5 lakhs in the account. So all the 5 is going to get invested into the second cycle, or only 3.5 will be done.
Good question. I don't have an answer for that just as yet, but Prithvi, would you want to chip in?
I can very quickly explain the churning part. So suppose you had invested 7 lakhs. So 7 lakhs were invested in the case that whole 7 lakhs we deployed in the first month, suppose. Out of 7, on an average, 3 to 4 stocks have achieved their target within a month as per our 5.5 years performance. So 3 stocks achieved their target. 3 lakh became approximately 3,30,000 after achieving the target. That's back in the ledger. Now we will hold till the next month's report comes back. So this 3,30,000, and if whatever you invest again, say 3.5, or if you don't invest nothing, 3 lakhs would go now, 3,30,000 would go now in the next month 7 stocks. So now your portfolio is 7,30,000 in first month 4 stocks which are currently on hold, not achieve the target or the stop loss yet, and next month 7 stocks. So that's 11 stocks, 7,30,000. Or we could say you gave me 7 lakhs, you said 3.5, we will invest in 2 months. So 3.5 lakhs in the first month, whatever profit or whatever stocks we achieve their target, that and the next 3.5 lakhs which you had given me for the second month, that would be deployed in the second month. So this is how systematically we will invest. It would be as per your discretion, how much money you want to invest, how much percentage you want to invest. If you don't give me any instruction, I would discuss with Sharat sir, and a model percentage or model portfolio would be decided for all your clients. So
No,
that can be done.
First 2 months, I understand, Pradeep. Like, for example, when you are entering into the third month, right? So let's say we, out of 7 lakhs, 2 lakhs are still lying in the funds and 5 lakhs are there in the account, right? So on the third month, you will be investing all the 5 lakhs.
Correct.
Right? So
Correct.
that's how it is. So here there is nothing like, let's say 5 lakhs are there in it. 5 lakhs are holding and only 2 lakhs are there in this. So is there any thing that we have to pump in, or this 2 lakhs is splitted in against those 7 7
This 2
stocks?
lakhs, yes, this 2 lakhs can be split in all the 7 stocks. No worries
Okay.
about it.
So it's
We
not a fixed number or anything. Whatever the amount lies in the account as on that day, you'll just
exactly,
split against those 7 and then distribute it equally.
exactly. Whatever is lying in your ledger on the day of the report, I will obviously be intimating you before a week. If you
Right.
want to add money, if you say no, I don't want to add money, whatever is available in the ledger, we will divide it by 7 and deploy it. And would have another choice? You could say ki 2 lakhs is in the available balance. No, just invest 1 lakh right now. We can do that as well. So as per your discretion, whatever percentage can be done.
Okay. So in between, for example, in this entire process, excuse me. So in this entire process, like for example, now on the first, on 5th, you got the report. I mean, we received the report. So let's say I have just 2 lakhs in the account. So I just want to say that, okay, I'll be putting one more 1.5 lakh probably in a day or 2. Right. So you'll wait till then, or how do we know that you'll be waiting for the decision, or you'll be just releasing that amount? How do we know that?
So if you invested 2 lakhs on the 5th, and
No,
after 2 days, after 2 days, you added 1.5 lakhs more.
Right.
Yeah, we will deploy that 1.5 lakh as well. As I mentioned, in
Okay.
the first week, we will do the buying. If the report is out on the 5th, which is a Monday, till 12th of that particular month, we will do the buying, whatever amount you can add, we
Okay.
will do the buying. But again, it's not preferable because the prices would go then up and down. We would prefer it to buy on the first day itself before 9 a.m. But throughout the week, we can do. No, not an issue about it.
No, but on those 7 stocks, you'll be buying only once in a month against the account, right? You'll not be doing multiple transactions.
No, not at all.
That's what I wanted. So,
Yes.
so it's like, once you kept the money, like for example, the 2 lakhs is divided, then again, even if I pump in the money also, you're not going to put that in the same month. Probably you'll pull that for the next month.
Next month.
Got it. Okay, fine. Yeah. Thanks, sir. Thanks.
All right, excellent. Ram, I think you have a question. You can unmute your line.
Yeah,
What's the question?
hi everyone. Thanks for the session.
Video,
I have,
Ram,
yeah, can you hear me?
video on. Thank
Sorry,
you
I'm
very much.
actually
Yes,
outside.
that's okay.
Yes, thanks for the session. One question I have, like for folks who are working in companies like PwC or their family members,
I got
so
your
we have to
question.
do a,
I got your
yeah.
question, Ram. Whenever you need compliance approval, it is a good idea to not take this. Because by the
Thank you.
time your compliance get backs and things, it is going to defeat the purpose. Don't take it. You have a roundabout route, which we are doing, and you already know this. You can either open the account in one of your parents or any of your people, distant relatives or relatives, siblings, who are not going to come in the ambit of your employment when you're working with any of these big four or any of the firms that require compliance clearance.
Okay.
That's your
Okay.
best solution to it.
Makes
But
sense.
if there is nobody and you have to do it in your name, please excuse yourself from doing this.
All right. Thanks.
All right. Anything else at all?
No, I'm good. Thank you.
Okay, great. All right, ladies and gentlemen, I think we've covered pretty much all the Q&A that is here. Should there be other questions, like always, folks, this is going to be followed with an email. And then once we do decide to take the service on, we can get on a call to understand if there is any specific things that you would like clarities on, and nothing. We are not going to initiate this unless you've got yourself completely thorough about this process. So with that said, we'll call it a day for today. Prithvi, Pratik, and Dinesh, thank you for being a part of this call. I'm pretty certain this has been helpful for all of us. And should there be other things, we'll circle back to you guys. All right.
Thank you, Sharad. Thank you for the time for everyone.
Thank you, sir. Thank you for your time.
Thank you all.
Okay, thanks. Bye.
Thank you.